Mark here. Welcome to another Greenbridge Investing market analysis. So in this session, I'm going to be first going over the Nasdaq because that's the title of this today's episode. By the way, I'm live streaming, so I want to thank you all for joining me. If you have any questions about any particular symbols you'd like to see, put them in the channel now so that when I get through my analysis, I'll have a list of your symbols to go through. Okay, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, make sure, let me know if the sound is coming in okay. All right, now, so let's get this thing started. And I want to put a quick question out there before I actually begin the analysis here. And that is, for those of you that are in our chat room over at Greenbridge Investing, how many of you are in the chat room using a mobile device? That's my question. Let me know if you're using a mobile device. If you're not, that's okay. Just let me know. All right, so let's begin here with the Nasdaq because the question is, are we at a peak again? Now, you know, what was this, like a week ago or a little over a week ago? We had this outside bar, right? See this outside candle here? And that was a big concern because that's usually how a change begins. But here's what people may not realize is just because we get that sign of a change doesn't mean it follows through right away. Okay, next. It's not exactly like that. This signifies a change, but the change may take some time to play out, and that's what we've been looking for. Now, since that outside bar, we've had this bullish pin bar, right, which is a bullish sign. It's a buy signal followed by this little mini higher low. But this formation in and of itself, okay, that's a higher low, should lead to a higher high. The question is, what if it does not? All right, and that's where we are now. So the fact that we had that outside bar a week ago, whenever that was, what was the date on that? July 12th, okay? That's the first sign. Now, what happens after that will also help us determine how we can measure risk and how we can confirm if we are looking at a peak. And so far, this yesterday's high, although it didn't push 11 or it pushed 11K again, right? But 1171. What was the high previously? 72. That's not good. Okay, I mean that's not bullish, I should say, because we should have gotten the higher high. So look, maybe we're not seeing any dramatic sell-off either. Usually when it's about to sell, usually there's follow-through. But my point is this: this market it's in a very vulnerable location. All it needs is a catalyst that can come out of nowhere. That's what you have to keep in mind. Now, can this thing fake out right here and push to new highs tomorrow? Sure, it can do that, and that can be driven by a catalyst as well. But we have to pay attention to, and we have to give more weight to the probability of the location, right? And that's why Andrew sent out that trade on the DAX, because the DAX is relatively weak. And this would be the type of situation where the IWM and S&P would come in as well as potential shorts, although it's still aggressive because of their counter trend. What needs to happen to confirm that this is a double top? Not the fact that we have two highs that are the same. We need to take out a support, okay? And I had a question in the chat room from Michael earlier about Tesla. And I happened to look at Tesla yesterday, and it's following the Nasdaq pretty much. It looks very similar. And there's a level on Tesla at 1420. Now, if price closes below that level, then you'll have a lower high established. Now, that can take a week or a few days. So same with the Nasdaq. Just because we have this potential double top formation does not mean it's in play. And that's another thing that you need to keep in mind. We need to take out this low, okay, which is 10,490, so 10,500. Price needs to close below that low. Now you may say, well, it's 300 points away. Well, that's the reward you get if you're an aggressive short. All right, if you're willing to take the chance now for this, for this tight stop and try to realize that broader potential, that's the reward you get. All right, for counter trend trades are typically, the reward risk typically looks like that. But the more conservative trader that really wants to be sure that things are turning would wait for that support break. Now, that doesn't mean you short the support break, but it means is you let it break and you let it retrace. And that lower high should offer a higher probability shorting opportunity, but you're not going to get the best price. Okay, and that's typically how it works. Now, for a swing trade in that scenario, for the lower high scenario, which again can take a week and a half, it can take 2 weeks for something like that to play out. We see that, then we can anticipate a move that may retest or go for those low 9Ks. I mean, it can happen, right? That's what we'd be looking for in terms of potential. So why this is so meaningful and why I'm spending so much time on this right now too is because this will affect your stock positions. Okay, this if the Nasdaq turns, and let's take a look at the S&P, because this is the other thing I wanted to point out is you have to look at the relative strength. I'm going to put the SPY on here, which is the S&P ETF. Now, yesterday it was looking a little like it was trying to establish that failed high with that little red candle situation going on. And DJ called this in the chat room, right? He mentioned it. And, here's the problem with this. The problem is when you get that type of situation, right, where you get the failed high, you should get follow through. And we don't have follow through today. So this is a conflict. Doesn't mean we won't get follow through tomorrow, but this is certainly a conflict. We are still in the location, though, for failure. So we have to see, for one, I mean, this market's going to close in, 50 minutes. If this thing was going to sell, I would imagine it'd be selling now, or at least in the next 20 minutes. I don't see any sign of that. So this is not exactly bearish at the moment. All right, now maybe it'll pop up a bit more and then sell off, but we're still relatively weak compared to the Nasdaq, and that's why I'm willing to, or we're willing to take chances on the short side with aggressive shorts like the DAX. Now let me just pull up that DAX real quick, right? That's the CFD, which is DE30 against the EUR, and this is that DAX. Now, don't mind that trade information that you see on this chart. That's from the trade of the week before. This is not the new swing trade that Andrew sent out earlier today. So just to be clear, this is from the week before, the trade of the week that we emailed everyone. Now look at this DAX. So we got the failed high situation, right? It's in the location, and we got the bearish pin bar. So that's what we're looking for, and this type of situation should be reflected across these broader markets. So if that Nasdaq starts to retrace and that S&P starts to pull back, this thing should be in good shape. So just something to keep in mind. This will affect stocks. I was looking at a lot of different stocks earlier today, and a lot of them are at some crazy high levels, and they're vulnerable in my opinion. So hopefully you've taken gains off the table and you've reduced risk. This is a location to be, more flat than aggressively in the market. And yes, sure, we'll have some positions on and they may get stopped out or whatever, but we're willing to take the chance on some of them. Just something to keep in mind. You don't want to go crazy here and keep buying and keep buying and keep buying when the market is in a vulnerable position. It takes time for the formation to play out. Okay, so that's what I wanted to say about the Nasdaq. Let's get into some other markets here. Now, hold on a second. What do we have here? All right, let's start with Bitcoin. And let me just look at my chat room. Okay, cool. All right, so I'm just looking at the comments here. Okay, GLW, sure. All right, so let's start with Bitcoin. All right, and Bitcoin had that little pop. That little pop yesterday. What was it? Yeah, yesterday. And I think it was Pow that you asked a question in the chat room the other day about the pin bar. And you said, hey, isn't that beautiful pin bar a reason to go long, a bullish pin bar? And our answer was, well, theoretically, yeah. But since we're in this range, we've been in this consolidation, bullish and bearish pin bars are just going to carry less weight until we get a move, because really it's just a lot of noise. And we have to, when there's a lot of noise like that inside of a consolidation, you have to zoom out and you have to say, well, where am I on the map here? Where am I? Am I nearer a low? Am I nearer a high? And this thing has been fooling around near this range low at 9,000. So what that means is the structure favors a bullish breakout. Now, can this nice candle, this bullish candle here, be the beginning of it? Yeah, it may be. All right, it's taking a little time to follow through, we'll get some more confirmation if we can clear this. What is this? What is this high over here? 94.79, 94.80. We need to close above that. But we still have this resistance to compete with at 95.64 to 10.168. Now keep in mind, when this thing squeezes, it's probably going to be sharp, okay? Because of the length of the consolidation, there's a relationship with when you get the breakout, how far that breakout should go. Because remember, a lot of this population of traders and investors are short, and they're going to become buyers. That's the process, and I didn't make that up. So that's what we're waiting for. We're still long from 92.25, and we just have to let this thing play out. Sure, it's uneventful, but you know, the patience, as you know, pays off. All right, so that's Bitcoin. Nothing to do there, but let this thing do its job. Now, let's get into real quick. Let's take a look at. I want to take a look at gold. Okay, and gold has been. Look at this. As you can see, I got the old trade information on my chart here. That's, you know, that third trigger. Wow, this looks dumb now. Like, why'd you get out at 1815? This thing's almost at what's today's high? 1870. What a dumb exit. Well, you know, we don't care. We're happy to be green. You know, I mean, we were a long way from over here. Now, this gold move is pretty wild, and in this type of situation, this is great for the gold stocks. Okay, I mean, the gold stocks should be benefiting in this. This is also great for silver, right? Silver's finally on the move. XAG USD. Now I'm just pointing, look at that. Wow. Talk about herd mentality, okay? This is how silver behaves. It lags, it lags, it lags, but when it goes, it goes. Now, I mean, what's this thing at today? 23.05 is today's high. It's like going $1 a day. That's nuts for silver. For the longest time, silver couldn't even move like 50 cents, okay? And here it is now, moving in dollars. So I point these things out because you may see hype developing. Whenever things go vertical like this, hype starts proliferating all over the internet. Oh, buy silver. Oh, silver's going to go to 200 in a week and all this other nonsense. Don't get consumed by the nonsense, okay? Right, so silver stocks, gold stocks, the mining stocks, they're going to do well in this. And you know, as you know, we're in Kirkland Lake, we're in Newmont Mining, you know, and all that other stuff. So we're benefiting from these moves. What I don't want you to do is I don't want you to get consumed by the hype that's going to come out when you see this type of price action. This is the herd, and this is when you should actually be unloading or at least locking in some portion along the way. I mean, whether you do or you don't is up to you or whatever. You know, you just stick with the targets. But my point is the behavior or the thinking that you should have in these situations is not, oh, I need to buy more. It should be, I need to unload to the herd. That's the thinking that you should have, okay? And taking less risk or reducing risk. So there are no buy signals here. You just have to let these things run and let them do their thing. Now, if they pull back, I mean, forget silver. If we're going to do anything with these, it's obviously with gold, right? Because the silver CFD is a real pain. So if gold pulls back, of course we're open to buying more, you know, and getting into another position. Perhaps it'll pull back. We have to look at these old resistance levels, maybe the 1800 area, maybe this old resistance over here, 1760s. I mean, who knows? If it provides that opportunity, we'll be open to it. If it doesn't, well, you know, we still got the mining stocks. So that's what I want to point out there. Don't get consumed by the herd mentality. Now, all right, so. Okay, thanks, Ricky, for letting me know about the laptop. Okay, yeah, sure, Ankit. Well, that's why I'm asking that question, because I want to figure something out as far as making things more convenient for our members and stuff like that with the whole chat room situation. Okay, DJ, use it on your phone. Okay, cool. All right. But yeah, I'm always looking to make improvements, and I'm always looking to make it more convenient for you. So let's take a look at GLW, which is Corning, I believe. This is an old one. And this stock's been around forever. Now, let's take a look at this here. Nice move, following the market, obviously. All right, it's on its highs. Just like silver and gold, I mean, you can't do anything with this. You can't chase this. Cannot chase this. This is, you know, it's running. What's realistic is a pullback, perhaps to this 28.5 area. and waiting for some sort of buy signal, that would be a reasonable pullback. That would be kind of light. I mean, because you can technically pull back to here or somewhere near here, which is 25. So you figure like the mid 25s is also a possibility. Those would be the inflection points I'd be looking for on a stock like this. Great formation, clearly it's strong. I mean, the Elliott wave count is very easy to see here. We got a 1, 2, 3, 4, and this is your 5th leg. Okay, and now obviously when you have 5 legs in place, you know, your potential becomes more limited. Now wave 5s, they can run wildly. It's possible for them to do stuff like that, but you have to keep in mind when you can count 5 waves, the party is almost over. All right, that's what you have to keep in mind. It's like you're lining up. It's lining up for a broader pullback, and a lot of stocks are in that position. So just something to keep in mind. If you're in this, if you're in GLW, these would be great levels to be locking in profits for sure. Okay, nothing wrong with taking profits at highs. Nothing wrong with that at all. But wow, I mean, how far is this stock? This was always never really like a major mover. 25. It was at 25. What is that? June. That wasn't too long ago, right? That was like a week ago almost. To $4. Okay, it's not bad. It's not. I mean, there's other crazy movers out there that are much crazier, but that's not bad. That's a pretty conservative stock. So that's how I would look at that one. Thanks for pointing that out. Very. Okay, let's take a look at Very. We've looked at now, I think it was Ankit or maybe DJ had brought up this one before. And oh yeah, nice. I remember one of those, I think it was Ankit, talked about this thing when it was still going vertical. And as you know, when I see something vertical, I always say the same thing. Stay away from it until it pulls back. And nice, pal, nice. This is a pullback. It's definitely a pullback. And also, it's a wave 4. I can see that without even counting. But I mean, if this is our bottom right here, right? This is a 1. This is a very small 2. And wave 3s typically look like this. They're very dramatic and they're very sharp. All right. And then you have this dramatic wave 4 pullback. Perfect. Nowhere near wave 1. Nowhere near the top of wave 1. So that qualifies as a wave 4. Now, here's the thing. So as you're pulling back, wave 4s are very tricky. All right. Because it's not like they have a simple bottom and you just buy it and then you get wave 5. Wave 4s can consolidate for a while. They can be full of fake outs. So what you want to do is find a level that, for one, is relevant, meaning it keeps repeating, and that level would be right here. That's basically, we'll round it to like 11.5. Okay, it went slightly lower, but it's fooling around that general area. And today, as you can see, it's trying to take out yesterday's low, which is a sign of bearish momentum, you know, following this lower high. Okay, so in this situation, you know, if you're interested in something like this for a long, I wouldn't do anything today. I would wait until it tests the low, because so far that's what it looks like it wants to do. So let's see if it does it. So that's around maybe 10, high 10s, somewhere like that. And what I'd look for is the double bottom, okay? Meaning it reaches that area, let's say the high 10s. It reaches that area and gives you a nice reversal, kind of like this pin bar right here. All right, you see something like that, that would at least be a reasonable time to assume risk, because you could measure your risk pretty clearly at that point, and your reward potential is pretty decent. I mean, this thing can reasonably test, what is this, 16, high 16s, maybe $17. That's within reason, without even making a new high. Now keep in mind, the stock market, if the stock market pulls back, and we get that dramatic pullback, because the stock market has not pulled back at all. If it pulls back, these stocks are probably going to feel it as well. I mean, it's likely. So that's one thing you just have to be careful of. Watch that Nasdaq. I mean, this is obviously a Nasdaq stock, right? Yeah, very most likely it's a Nasdaq stock. So, okay. Right. So yeah, I think Ms. DJ mentioned this one. That's what I'd watch for something like this. Like this, if it touched that low, this would come up on our radar for a swing trade long idea. All right, and then we'd be watching for the reversal, and that's what we'd be, you know, that's what we'd be sending to our members, something like that. If we see something like that, at this point, it's just too early. But it's what I like in general here is I like the general location. Very nice location, folks. So thanks for pointing that out. One important lesson to learn from something like Very is you don't buy it when it's making these vertical moves, right? Because look, if you bought this thing, let's say over here on this candle, and you bought this thing at, the high 18s. Now you're sitting in it, goes back to 10, and now you're hoping it comes back. Why do you want to be in that position? Right? That's a weak hand. If it goes lower, you're going to bang it out and take the loss, or maybe you hold on hoping it comes back and it goes to 5. I mean, that's the kind of risk you're now facing by doing that. That's why it's like you wait for the pullback, and this pullback took like 2 weeks, right? How long has this thing been in a pullback for? It peaked around June 23rd, so it's been like a month. It's been like a month it took to pull back. So just to kind of give you a sense of how much patience is involved, especially, for people that are impatient, they want to jump into things with action. There are when something's going vertical, like gold and silver, you look for something that's not doing that, okay? And you stay away from those vertical ones until they look like this. So the only skill that's required there is patience. All right, so great. Thank you for pointing this one out. All right, let's see what else we got here. Well, I got a long list here. Okay, so silver. All right, so Florin, yeah, we just took a look at silver, but I'll take a look at it again. Actually, you know what, I want to point out, there are silver stocks, because when you're not in the CFD, or maybe you don't have access to the CFD, there are alternatives. And there's one called AG. Okay, look at this stock. This is a stock that's following silver. Now, keep in mind, this stock was uneventful and was garbage for a long time. I mean, what's the low? The March low on this thing was $4.24. And then it went up to like $10, but it took, 3 months to move $4? Compared to all these other wild movers these days, this one is just, what a piece of garbage. But that's typical of silver. Now, when silver's on the run, wow, now this thing's a superstar. Wow, everyone wants to be in this thing now, right? Look at this. So you can't touch these now. You can't touch this. You can't touch silver. You have to, if you're in it, that's what you want to be in it, right? You want to be in it before the fact. Once it starts doing this, and this is what we're anticipating out of Bitcoin at some point, once it starts doing this, you have to be in it. You can't be chasing it or thinking about it now. You should have been thinking about it back here, okay? So there's nothing to do but let these things run and wait for them to cool off. The problem with something like silver is when it runs, it has a big run, and then when it cools off for like 6 months. So I would leave silver alone, right? Gold offers more opportunities in terms of structure and pullback and more short-term swing trade type of things rather than silver. That's why we've been avoiding silver. The best way to play silver, even on some sort of pullback, is with the physical. And Andrew talks a lot about that in the chat room with the coins, buying like the silver coins and stuff like that. Because, but that's a little bit of a different game. But it's better than the paper, because the paper is highly leveraged for one, and it's a real pain to deal with. On top of that, with CFDs, usually you have to pay interest, or what's called a swap. So you can't really sit in these for a long time, which makes them very unattractive for trying to hold them, okay? So that's silver. By the way, you could check out our gold webinar. If you haven't seen it, Flo, I think you were at that one, Florin. But for those who have not seen the gold webinar, I know Ankit was there and DJ. In fact, I think it was DJ that was helping me conduct the webinar. You could check out our webinar library over at greenbridgeinvesting.com, and you can see that webinar. I talk about the silver and the gold and the difference between the paper, like financial instruments like a CFD or stock compared to physical coins and bars. All right, now let's take a look at the next one here. I got a lot of stocks here. So Eric. All right, so I believe that's Erickson. By the way, if you're new to this channel, make sure you subscribe, all right, to the YouTube channel here, because you'll get an email notification from YouTube every time I do one of these. And if you like the video, give me a like, give me a thumbs up, let me know. All right, so I know that I'm doing a good job. Now, look at this. Wow. So again, see what I don't like about this, DJ, right off the bat, I'll tell you what I don't like about it. I don't like all this spotty price action. It's very spotty, okay? It's like these tiny little daily candles and gaps, and what a mess. I don't like stocks that trade like that, for one. There's just so many better stocks out there, because that to me is a sign of low volume and low liquidity. That's what that's a sign of. Now, but okay, look at this gap and look at this move. You can't touch this, okay? Like that song from MC Hammer. Can't touch this. You just can't. I know, it's bad joke time. There's nothing to do here. Again, if you're in, you want to be selling to the herd, or at least partialing out, locking in profits. That's the habit you should get into when you see something like this. Don't make the mistake of thinking, oh, it's going to double, because that's usually when greed sets in and it doesn't double. And then you hold on to it and it pulls back a little bit. And I know because I've done this many times. Pulls back a little bit and you're like, okay, I'm going to hold it back to when it gets to that high and then I'll get out. And then it never goes back to the high. And then you give back the whole profit. That's typically what the decision-making process is. And that's, you want to rewire that, okay? You don't want to be doing that. When you see vertical like this, you want to be thinking, let me reduce risk, let me partial out. Otherwise, wait for pullback. I mean, that's the other thing I'd be thinking when I see these. Wait for pullback and see if there's a buying opportunity from there. Okay, so thanks for pointing that out. My broker doesn't have the DAX. What sort of level would you look at for an aggressive short? Okay, so, well, the DAX, Andrew put that in the channel today. Yeah, let me pull that up. DE30. So, I mean, and as far as an alternative to this, again, don't go by these levels. Although, I mean, I guess you can, although 12,500 is a long way from here. So like 12,500 is like back here. I didn't see the sell stop. Maybe someone in the channel, you want to share it in the channel. But Andrew called it. Your question for this is, where would you look at as a aggressive short? Well, look, I mean, you have this bearish pin bar. It's in a location for a failed high. You take out that pin bar low, which is 30.75. So you figure 13.075. You figure 13.50, 13.45. It starts taking out those levels because that will be below yesterday's low. Then that would be in play. Okay, Andrew may have picked an even lower entry. I don't remember, but that's what you'd be looking at. The risk for something like this would obviously be that pin bar high, maybe slightly higher. You never want to put your stop at the exact high because that's where everyone puts their stop, right? So 13.315, you know, you'd have to put that at like 13.350 or something out there. All right. So, I mean, there's a decent amount of risk, but if you look at that potential reward, it definitely is greater than the risk in this situation. And how much further are these going to go, especially if that S&P turns, okay? Which it can happen overnight, you know, just out of the blue. So just something to keep in mind there. Good question. Oh, I'm sorry, Ricky. You meant the S&P. By the way, I'm behind here. So you guys may be answering, and I'm not seeing your answers because I'm looking at the list much higher. Okay, I just see Ricky. Yeah. Okay, I just saw that now. Sorry, I'm a little slow. All right, here. All right, so the S&P. That's a good question because I was going to say, you know, you could take a look at like the S&P, or you can take a look at the IWM. Now the SPY, which is the one alternative. The problem with this here, like I said, is we're not getting the follow through. But to answer your question about levels, hold on, Ricky. Let me just go back here. What level would you look at to go for an aggressive short? You have to look at the lows. You have to look at yesterday's low, for one, which is 323.95. Now today's low is 324.50, right? So that's still above yesterday's low. I would use that as a reference point, but if you want to be a little bit, tiny little bit more conservative, even though this whole thing is aggressive, I'd look at this low over here, which is 320. Okay, so the market needs to move somewhat to get there, but you would have that failed high in place, and you should get follow through or momentum. Remember, if you take a short on something like this, which again, it's aggressive because it's counter trend, but if you take a short and the next day you get a green candle, that's not how a short should behave. A short should move quickly because fear is usually a much stronger motivator than you know, greed or complacency or whatever. So usually when people are banging out, they're banging it out fast. And usually everyone's doing it at the same time. So you should see follow through. That's one thing to keep in mind. And that can help you gauge if your short is, you know, if you should hold the short or if you should get out sooner, right? And sometimes that's why we use options. We'll sell calls because at least if it wastes time, there's benefit for us in that time that's being wasted, right? We get paid for that. So, and it gives us more flexibility if the market is not going to go our way. So let's see what else we got here. Okay, gold, NBFC are, oh yeah, okay. So like in BTC when it was right, Ankit, it's exactly right. And that's the herd mentality. Fear of missing out. I mean, that's part of the herd mentality. Everyone piles in. And remember at 20K, do you remember what everyone was saying? I sure remember. You had these people coming out like on TradingView and all these other forums predicting that Bitcoin was going to be at 30K in just a few days. And over the next year and a half or whatever, or two, Bitcoin went to 3K. Not 30, it went to 3. So just keep that in mind. And I remember I was telling people, don't get consumed by the herd mentality. You can find videos and you could look at my TradingView analysis at that time, what I was telling people. All right, and that's what I was telling people. Stay away from this thing at these highs. Okay, Hamid, could you please look at Love? Sure. I was actually looking at Love earlier today. Lovesac, I believe they're called. They make furniture. Right, because this thing was getting some attention here. They make like bean bags and stuff and furniture. So again, vertical, nice high or low. We took out this high here of 28.86. That's a good sign. Higher low should lead to higher high, but can't touch this thing now. Can't do anything with this. Certainly can't buy it. This is a place to lock in profit. Like the place to have bought this would have been back here. This was not on our radar. But that's the inside bar. That would have been, if there was a place to take risk, I mean, and this is what you could learn from looking at something like this. If there was a place to take risk, that was the place. And that's what it looks like, okay? You don't know if this is going to follow through like this, but at least your reward risk makes sense and you're on the side of the trend, which obviously is bullish. So can't do anything here, but this is a location to lock in profits, take partials. And of course, if you're in it and you locked in some profit and you've reduced risk, then what? Let it run. Just let this thing run. Just because there's a tail on here doesn't mean it's going to turn just yet, okay? There's really nothing bearish about this. So maybe the next day or two you get some inside bars, which, you know, that would be the momentum drying up and perhaps it's going to turn. But you have to give things like this a chance, like the pound recently. That pound went and man, did it go, right? I'll take a look at the pound here in a minute because I forgot to go over some forex pairs. But that's what I would do with something like Love. Just wait. And of course, this would be a good candidate to wait for another pullback of some kind. And perhaps, you know, there's a swing trade in there somewhere. So a pullback to the old high, that would be the first inflection point I'd be looking for. That's too tight. I'd like to see a deeper pullback. You know, perhaps to somewhere around here, or maybe even a test of this low if possible, which is what, 23.95, so 24, slightly lower. That would be ideal. I don't know if, you know, this market would provide that type of opportunity, but if the Nasdaq and S&P pull back dramatically, this is likely to feel some of that pain. So we have to see, but it's definitely on the radar. Thanks for pointing out Love. Now let's take a look at the other one here, BGS. And then I got a stock. Don't let me forget. I got a stock to show you guys that we're also going to put on the radar. A stock that I found that's very interesting, and it's definitely on the long radar. So B&G Foods. Oh, okay. Interesting. So I'm going to test you guys out here. All right. And I know probably Ankit and DJ are going to answer this thing before I can even ask the question. But what is reasonable to anticipate at such a level? When you see something like this, what are you guys thinking when you see something like this? Okay, you got this old high over here at 26.36. And then yesterday's high was 26.61. We have an inside bar in there today. But what are you guys thinking at this location? Are you thinking long, or, you know, what are you thinking probability wise? Because these guys have been around long enough. They know my style long enough that they could probably answer that question very easily. So what are you guys thinking? Double top. See, double top. Pow and Ricky, look out for the failed high. Right, Ricky. Right. You guys too. You guys obviously been learning too. You guys been long enough. You've been watching enough of my videos. See, there you go. DJ, got it. Failed high. You guys have been watching my videos long enough to know. That's the probability that you're facing here, Hamid. Failed high situation. So again, if you're long something like this, I would definitely be locking something in. Now, it doesn't mean you have to get out of the whole thing and say, oh, this thing's going to fail. I mean, we don't know if it's going to fail, but there's a probability, there's a chance, there's a greater chance that this thing could fail, especially in light of how the Nasdaq and S&P look. So I would be reducing risk, and then at that point, it's like, okay, let's see what it does over the next few days. Does it break out and keep going? It's possible. But is this a place to add new shares? No, this is too risky to add new shares because of that failed high probability. Okay, so nice stock. I mean, this is a food stock. How long did it take for it to go from this low to that high? Let's see, it's $20 on, what's that date? On June 11th, and it went to a high of $26. So what, 3 weeks basically to move? Yeah, it's a little bit of a slow mover, but that's okay. Nothing wrong with a slow mover. Just something to keep in mind there, though, as far as the location. All right, so thanks for pointing that out. All right, let's see what else we got here. Okay, POW, STNG. Okay, looks like it's lingering at support. Does the inverse of weak stock don't linger? Does the inverse rule of weak stocks don't linger? Does this apply to strong stocks don't linger at support lows? Well, that's a very good question, POW. So let's take a look at that. That's Sting is Scorpio Tankers. This is another. I found this one also recently, and this one caught my attention. For one, there was some unusual options volume, options situation with the CEO of the company, buying like 5,000 calls or something like that. We spotted. We talked about this on the podcast. And yeah, something that's at support really shouldn't linger there for long. Although sometimes, here's the thing, there is a difference as far as bias goes. There's a tendency for markets to linger more at support than at resistance. And I think that has to do with people are more fearful, and fear is a very motivating factor at resistance levels. Like here, you know, this thing didn't waste any time up here. It started to sell off and it sold off. Okay, now you can make that argument about the support over here too, like it touched support and it rallied. But the thing is, it revisited the support a couple of times. Look, it touched here, bounced, touched, went slightly lower, gave us a failed low, bounced, higher low. I mean, it spent a lot of time around these lows, if you think about it. And this is over a couple of weeks here, right? Meanwhile, it only spent a day up here. You see that difference? Or, I mean, if you want to argue, you could say, okay, maybe it spent about a week fooling around because it tried, pulled back, fooled around for a few days, and then, you know, one day here, and it was on its way lower, right? So you have this basing, and that's not unusual, all right? So in my opinion, it is likely to see a stock spend more time at a support than you will see at a resistance. I mean, it's not a dramatic difference, but I think there is a difference there. So it's sitting around here again, and that's why I liked it, because this thing, you know, why did it stop going lower, right? Someone's accumulating it, someone's buying it, and then the president or the CEO bought 5,000 calls. I think they were January calls. So I don't think he's going to throw his money out the window. He must know something. He owns the company, runs the company or whatever. So that's public information. Now, so yeah, so this thing is in a good location, right? It's at this double bottom, a broad, very broad double bottom situation, and it's just been lingering at that support. So if this, the context has a lot to do with this. If this price was a lot higher, pal, like if this lingering was in the middle of the range or much higher, I would be much more suspect and be like, yeah, I don't know. But since it's at such a low and it's lingering, I'm okay with that, and I'd be looking for that breakout. Okay, I like this thing as a long, even though they, you know, obviously they've had some problems and this and that and whatever. I'm definitely bullish on that. So good question. I hope I made that clear for you. All right. Okay. Let's see. POW. Okay. Okay. All right. So. Okay. Oh, ZUMZ. We looked at the. Was it POW that you brought this up a little while back? I remember this stock. Let's take a look at this. I think it was POW. Okay, interesting. So we have a consolidation here, right? And this is what you want to see on a strong stock. This is exactly what you want to see. Look at this. People lose sight of this right away because they're always focused on the candles. And that's an important lesson. You can't just look at the candle alone. You have to look at the context. Now, so you had this higher low over here, nice higher high, wave 3. This is a wave 4. Wave 4s look like this. They can be sharp consolidations or they can be elongated like this. But what you have here is that, right? You have that, and you know, you have like this situation right here. So that's a bullish sign. All it needs to do is start taking out some of those recent highs, and this thing could be on its way. You can measure your risk from this low here of 24.25. That's, Yeah, 24 and a quarter. That's where you're looking at your risk. If it closes below that, that's a problem. It shouldn't do that. Although it may find support slightly lower, you have to measure your risk from somewhere. That's the level. Now, this is one of these situations where I'm okay with a breakout. Usually I'm not big into breakouts. But why would I be okay with a breakout on something like this? Because you're breaking consolidation. You're not breaking a resistance. You're not breaking like a peak, which it can fail. You're breaking near a low, near a range low. Okay, that's what I like about it. So something like this, 26.55. So you figure you're pushing 26.75. What's today's high? 26.24. So you start pushing like 26.75. This thing that may qualify as a breakout, at least compared to yesterday's high. It would be nice if it can clear this 27 and a quarter. That would be ideal if it could do something like that. And then you may get another leg higher, at least a wave 5, which can reasonably test this high of 31 and a half. Okay, that's how I would look at something like that. This might be a good candidate for a swing trade long. I want to talk to Andrew about this, but this may be a good one right here. I like this. Thank you for bringing this one up. And it's not a ridiculously expensive stock either. So when stocks like this start to pop, this goes all over the day trader radar, and they're all piling into this thing. And day traders could be good because they provide the liquidity for us to get out, right? And that's what we need. We need buyers to sell to. So very nice. I like that one. I don't know if you're in that, but that's definitely a candidate. You know, you can actually even buy that a little early. If you buy that before it closes today, it's just a little aggressive because it still could be fooling around inside of this noise here. It still could be fooling around in there, so you have no confirmation. But if you're willing to take the risk, it's within reason. That's what I want to point out. And you're risking like, you know, $1 or $2 to try to make 3 or something like that, or maybe even 4. That the reward risk makes sense. All right. Now keep in mind, if the Nasdaq has that broad pullback, many of these stocks will suffer. Not all of them, because not all of them follow the Nasdaq, but many will suffer. So you always have to keep that risk in mind as well. All right. So thanks for pointing that out. I have to keep that on my radar. FSM, also a good silver stock with nice move. Okay, cool. Thank you, Ricky, for pointing out FSM. I bought some options in January and sold off most. Okay. Okay, cool. All right. Yeah. Wow. I'm way behind here on the text. Okay. Double top. Okay. Okay. So now, great. Now let me point out, you guys. I mean, I know I talk really for a long time, but I want to point out one stock here, and then I want to jump onto forex real quick. And this is a stock I wanted to point out that we're going to put on our radar. It's called Run. Have you guys seen this one? Talk about can't touching this. This is a solar panel stock. They install solar panels, or they're into that whole solar thing. Remember the whole solar thing like 10 years ago? Solar power, blah, 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 green energy, and the world is going to have solar panels all over every roof and all that other nonsense. Well, wow. I don't know. I guess someone renewed that idea. Well, obviously, look at this gap. It started from this gap, and it's just been vertical. Every day it's vertical, vertical, vertical. This is a type of stock. Yeah, right. That's what I said. This is a type of stock that will attract Robinhood traders. Now, again, if you trade on Robinhood, I'm not picking on you, but when I say that, you have to understand something about Robinhood traders. Most of them are not sophisticated professional traders. They don't use systems and methods and techniques. They're relying on news and intuition and stuff that they read on the internet to make decisions. They're also trading from the app on their phone. Professionals, I mean, you could manage positions on your phone, but the analysis is not done on a phone, right? So right off the bat, that if that's what you're relying, if that's the only information you're relying on, and saying, oh, but there was a news article that I read, well, then you're going to be, most likely, you're going to be a misinformed investor, and you're going to react on feeling, right? And you know, I pick on Robinhood, but Webull is the same story. Even big brokers. Robinhood and Webull are just today's version of E-Trade and Ameritrade and Scottrade and all those other ones from 20 years ago. It's just today's version of them. It's the same idea. So that's what's going to attract those type of traders. They're all going to pile in here thinking that this thing is going to keep going because they don't know. Now, so how is that an opportunity for us? Well, of course, I'm pointing this out. I want you guys to put this on your radar because we want to find a pullback in something like this. When I see a vertical move like this, it's like, wow, there's obviously there's a lot of momentum. The stock can move. It's proven that it can move, just like Roku, just like Jumia, just like some of those stocks that, Workhorse, which, I have to take a look see where that thing is. But they can move, right? And we want to capitalize on that momentum. That's what we do. So we want to see a pullback, okay? But in order to capture that pullback, it needs to be on your radar early when there's no opportunity, like now. So put it on your radar, the first inflection point based on historical price action, not proportional, but historical, is right here. And that is $23.65. And that's basically where this gap is. So you figure if this thing could pull back to the 24 or 25 area, if it can do something like that, that's one inflection point that we're thinking of right from the start. I suspect it may find a support sooner, but it needs to prove itself with the structure. So that's what I wanted to point out. Keep this one on your radar because it's definitely on ours. And like I said, opportunities come from planning and recognizing things before the new opportunity presents itself, right? Can't do anything with this now. There's no opportunity here except to sell to the herd mentality people who don't know any better, right? Because that's who's driving a stock like that. And day traders. Okay, cool. So I just wanted to put that out there. Now, real quick, before I wrap this up, let's take a quick look at the pound. Because, I'm supposed to go over those forex pairs. And there's so much to talk about here that I forgot. So let's take a look at the pound real quick. Look at this. So the pound reached our second target of 27.50. And it looks like there's just no stopping in sight. All right, and this is an example of when people ask me, if they're in a position and the thing goes vertical and you've locked in some profit and you say, what should I do with this thing? Well, if you've locked in 2 profit targets like we have on the pound, I don't care what this thing does here. I don't care if it pulls back. I don't care if it breaks out. If it goes back to break even, the trade is green. So why would I not let this thing run to its third target, right? That's and I'm pointing this out from mentality. We can't do anything with the pound now. Just let it run. All right, we have our 1/3 of the position left. Let it run. Now, I want to mention the euro because Michael asked about the euro yesterday, and I was telling him the low 16. Look at the euro. The low 16s is basically the inflection point. And again, these things don't appear to be stopping anytime soon. They're just driving, and that's for whatever reason. I don't care why. They're just pushing. Let them run. Now we got faked out of the euro. We exited our position on this bearish pin bar right here. All right, at 1409, and the reason behind that was, well, failed high situation, and we did not want to give back the profit that we had. And look, we got faked out. Are we upset that we got faked out like this? No. Okay, we were green. We were nice and green in this trade. We sat through a lot of this noise and nonsense, and we did not want to give the profit back. Okay, so we're not going to catch them all at the top. No big deal. We simply wait for another opportunity in the euro. But if you're in this thing and you still have some or whatever, just let these things run. That's why you have to let the pound run, because you want to see one of these things. And at this point, there's no reason to exit. Okay, and that's why we have profit targets in place in advance that obviously we share with our members, so that there's really not much thinking. You just put the target in there, the market gets to it or it doesn't. And at least if it's reaching your profit targets, that's a lot less thinking you have to do, a lot less second guessing you have to do. The market takes you out, you've locked in a profit, great, look for the next opportunity. And you have to keep it like that, okay? It's simple and it's effective. And that's what keeps you in this game over the long run, not home runs, which is what everyone wants. All right, everyone, so I've been talking for a really long time. You guys have some great questions here. Thank you for all your participation. Do you have any other questions before I wrap this up? I mean, the market's going to close here in just a few minutes. But if you're new to Greenbridge Investing, please make sure to check out our website at greenbridgeinvesting.com. Also, check out our active investor membership. We send out swing trade ideas. We send out portfolio ideas, and there's a lot of analysis in our chat rooms. Okay, we're always trying to educate our members to help you be more confident with your own decision making. Also, make sure you like this channel or you subscribe to the channel here so that you get a email notification every time I produce one of these, every time I stream one of these. And if you like the video, give me a like. Let me know you like it. Okay? Otherwise, like, I feel sad. I'm just kidding. No. So anyway, just wanted to put those things out there. No problem, you guys. Really appreciate you, participating and everything else. If you have any other questions, share them in the chat room. We'll get to them in there, and I will see you next time. Thank you for watching.